Scroll through YouTube, Instagram, or TikTok for 5 minutes and you'll find them everywhere. The financial gurus. They sit in front of luxury cars. They stand inside rented mansions. They flash screenshots of trading accounts. They promise freedom, passive income, early retirement, and the system the rich don't want you to know. They teach you how to invest, how to trade, how to build wealth, how to escape the 9 to 5. And yet, here's the uncomfortable truth. Most financial gurus don't make their real money from investing. They make it from you, not from stocks, not from crypto, not from real estate, not from options, from selling financial advice itself. Which raises a disturbing question. If their strategies actually worked so well, why would they need to sell them to millions of strangers online? The guru business model nobody talks about. Financial gurus present themselves as investors. In reality, they're marketers. Their real skill isn't beating the market, it's capturing attention. They understand algorithms, thumbnails, emotional triggers, and viral psychology far better than they understand financial theory. The core product is not knowledge, it's aspiration. They sell the feeling of being smarter, richer, more disciplined, more independent. They don't just teach finance, they sell identity. The identity of someone who is ahead of the system. This is why their content looks the same. Same phrases, same aesthetics, same motivational tone, same enemies, same promises. They're not competing on accuracy. They're competing on emotional resonance. Why teaching is more profitable than investing? Here's the brutal math most people never see. If you're truly good at investing, your returns compound quietly. You don't need millions of followers. You don't need daily content. You don't need sponsorships. You don't need affiliate links. You just need capital. But if you're a guru, your income scales with attention. More views means more ad revenue. More followers means more product sales. More hype means higher course prices. More fear means more urgency. Teaching finance has unlimited upside. Investing does not. A 10% annual return is considered elite in real investing, but a $1,000 course sold to 10,000 people is $10 million. And that requires no risk, no market exposure, and no accountability. One is slow and uncertain. The other is instant and predictable. So the rational choice for most experts isn't to invest, it's to teach. The real products financial gurus sell. Most gurus pretend their main offering is education. It's not. Education is the marketing layer. The real products are courses, coaching, masterminds, memberships, Discord groups, signals, newsletters, affiliate links, brand deals, sponsorships. Every free video exists to push you into a paid funnel. Every value post is designed to build trust. Every success story is carefully selected. Every failure is quietly ignored. Gurus don't monetize results. They monetize belief. Once you believe they're successful, you stop asking where the money actually comes from. Why fake wealth is part of the strategy. The cars, the watches, the villas, the jets, the hotels, the day in the life vlogs. Most of it is staged, not necessarily fake, but strategically exaggerated, because financial gurus understand one core psychological rule. People don't buy logic, they buy proof. If you look rich, people assume your advice works. They don't verify, they don't audit, they don't ask for long-term performance data, they just copy. Appearance becomes evidence. Lifestyle becomes marketing. This is why so many gurus spend more time building personal brands than building portfolios. Their wealth isn't the result. It's the advertisement, the conflict of interest nobody questions. Here's where it gets dangerous. A financial guru has no incentive for you to become independent. If you actually mastered investing, you'd stop buying courses. You'd stop watching content. You'd stop needing advice. That's bad for business. So most gurus unconsciously design systems that keep you slightly confused, slightly hopeful, and permanently learning. Always one more strategy, one more method, one more secret, one more mindset shift. You're never supposed to finish. Because finished customers don't generate recurring revenue. The psychology they use to build instant trust. Financial gurus don't start by teaching finance. They start by making you feel understood. They talk about frustration, about being stuck, about working hard and getting nowhere, about feeling like the system is rigged, about being smarter than your boss but still underpaid, about wanting freedom, not luxury, but accidentally showing luxury anyway. This emotional mirroring is not accidental. It's one of the oldest persuasion techniques in marketing. If someone describes your internal problems accurately, you subconsciously assume they also have the solution. So gurus begin with pain, not data. They don't say, here's a statistically proven investment strategy. They say, I used to be broke just like you. That single sentence is more powerful than any spreadsheet, because now the relationship is emotional, not analytical. And once it's emotional, logic stops being the main filter. Why gurus avoid verifiable performance? Here's something almost no financial guru ever provides: a long-term, audited track record. Not screenshots, not single trades, not one good year, not hypothetical returns. A real, independently verified performance history. Why? Because real performance creates constraints. If you show real data, people can analyze it, compare it, question it, replicate it, criticize it, audit it, hold you accountable. But if you show vibes instead of numbers, nothing can be challenged. Gurus understand this intuitively. That's why they focus on testimonials instead of data, stories instead of statistics, before and after narratives instead of spreadsheets. A person saying, "This changed my life," is more persuasive than any verified return ever could be, because it feels human, even if it proves nothing. The role of scarcity and urgency. Almost every guru uses the same language. Limited spots. Only 24 hours. Last chance. Enrollment closing. Never offered again. Private access. This creates artificial scarcity, not because the product is limited, but because urgency bypasses critical thinking. When people feel time pressure, they stop evaluating quality and start fearing loss. They don't ask, "Is this worth it?" They ask, "What if I miss out?" This is why guru offers are always framed as once-in-a-lifetime opportunities, even when they relaunch every month. Scarcity doesn't increase value. It increases compliance. Why regulators can't stop them. You might wonder why financial gurus aren't constantly shut down. The answer is simple. They never technically promise anything. They say things like, "This is educational." "Results not guaranteed." "This is not financial advice." Past performance doesn't predict future returns. Legally, they're safe. Psychologically, they're persuasive. They operate in the space between inspiration and instruction. They avoid explicit claims while strongly implying success. They let you draw your own conclusions, which is far more powerful than telling you directly. If you lose money, it's your fault. If you make money, it's their credit. It's the perfect legal shield. The real audience isn't beginners. Here's another uncomfortable truth. Financial gurus don't target people who are already wealthy. They target people who feel behind. People with ambition but not clarity. People with motivation but not experience. People who are uncomfortable but hopeful. People who want a shortcut. This audience is emotionally primed. They're not lazy. They're not stupid. They're searching. And that search makes them vulnerable to certainty. Gurus don't sell complexity. They sell confidence. They say, "Follow this system. This is all you need. Just copy me. Anyone can do this." Simplicity feels safe, even when reality is complex. The most profitable asset is attention. Financial gurus didn't crack the stock market. They cracked human psychology. They understood that attention is more valuable than accuracy. That belief is more profitable than truth. That aspiration sells better than education. They didn't become rich by predicting markets. They became rich by predicting people. And once you see that, you stop asking, "Is this advice good?" and start asking the only question that really matters. Who is actually making money here? If you want more breakdowns on hidden business models, psychological marketing, and how modern wealth really works behind the scenes, subscribe to the channel.